What are Sharia-compliant mortgages? Sometimes called Islamic mortgages, Sharia-law compliant mortgages are technically not mortgages. Instead, they are normally home purchase plans that help you buy a home in a way that doesn't involve paying interest or taking out a loan. This allows Muslims to get a home of their own without compromising their beliefs. Sharia-compliant mortgages work by the lender purchasing the property on your behalf and becoming the legal owner. You will then pay monthly payments, part of which will be rent to your provider and another part will go towards building up your equity stake. Over time, you will own more and more of the property. At the end of the mortgage term, you'll either own the property fully or be able to buy the remaining equity from the provider. Islamic mortgages can be more expensive than a standard mortgage, but not always. You sometimes need to put down a 15 to 25% deposit. This can make buying a home more expensive at the start, although you can find schemes that only require a 5% deposit. The upside of this is you'll have a larger equity stake in the home to begin with. Because you have to put down a larger down payment, Islamic mortgages can be harder to qualify for. Like other mortgages, you will also need to pass affordability checks to ensure you can afford the monthly payments. If you are self-employed or ever had any issues with credit in the past, you might not be eligible for certain schemes. With some schemes, you may also need to meet a minimum income requirement to qualify. There are a range of Sharia law compliant mortgages available. Here's the top 3 which we advise on. StrideUp's home purchase plan lets you buy a share of a home worth up to 6.5 times your income. Over time, you'll build up your equity stake through your monthly repayments until you own up to 80% of the property, while StrideUp will own 20%. You can also choose to make overpayments to chip away at the share to get full ownership. Plus, any increase in property value belongs entirely to you. So you'll never have to pay StrideUp more than the initial price they paid to buy back the property from them. Your Home's part buy, part rent scheme allows you to buy a share of a home worth up to $600,000, then pay rent on the rest. You can choose to purchase more of the home over time or sell your share when you move. You'll also benefit from any property value gains on your share. Plus, you're entitled to 50% of the value increase on the share you didn't buy. Wayhome's Gradual home ownership scheme lets you purchase a share of a home worth up to 10 times your salary. Each month, you can choose to buy more of the property or in a lump sum when you're ready. Here at Tembo, it is our mission to make home happen. We help buyers discover that they can get on the ladder sooner with a range of specialist schemes. Head over to tembomoney.com to get started.